Hi, I'm Bill Walker. Most investors have labeled the last 10 years of global investing as a lost decade. My guest today, Jeff Hyrich, begs to differ. Jeff is the lead portfolio manager on the Trimark Global Balance Fund and Trimark Global Endeavour Fund, both of which are doing very well under his stewardship. In fact, Trimark Global Endeavour recently won the 3-year 2012 Lipper Award in the Global Small Mid-Cap Equity category. So Jeff, it's great to talk to you today. Let's get into this notion of the lost decade, because Trimark Global Endeavour is one of the top performing funds in its category. How did you achieve this?
Thanks for having me, Bill. What we did to achieve it is, I'd say, common sense business investing. So what we did is we bought high quality companies with solid growth prospects and bought the companies when they were temporarily out of favor and very cheap. What we're also trying to do is, in order to do better than other people, you can't own the same stocks, or else by nature you'll have the same performance. So we're looking for names that are off the beaten path. In order to find those ideas, you have to travel. So I've been to many different countries over the years traveling, and you have to work hard. And I'd say the last thing that's important is to have a long-term focus, and also to cue out the noise, so you don't let the short-term noise influence your decision-making process.
That's interesting. Let's drill down a bit on the funds, because the funds you manage are quite different than those of your competitors. Can we spend some time just talking about the differences with each fund, starting with Trimark Global Endeavour?
Sure. The first difference for Global Endeavour is it's predominantly a mid-cap equity fund. And so if you look at most global equity funds, they would own fairly large cap size companies. So for example, our average company is probably, 1/5 the size of the average company that most global equity funds own in Canada. Second difference is we're fairly concentrated. So most of our fund is predominantly 25 ideas. Third difference is we tend to be very low turnover. So I think the last 3 or 4 years, my turnover has averaged probably less than 25%. So I think those are three differences that differentiate Global Endeavour versus the competitor funds.
And what about Trimark Global Balance Fund?
Sure. The Global Balance Fund is unique in that, first, it's an all-cap fund, and so it can own small caps, mid caps, and large caps, and we can flex in and out of that spectrum. So, for example, 10 years ago, when the internet, there's an internet bubble and internet stocks are very expensive, a lot of large cap technology stocks were very expensive, and we didn't own them at the time. 10 years later, some of these same companies have continued to grow very strongly, and yet now the stock prices are very, very cheap. So for an example, we didn't own Microsoft 10 years ago, we own it today. 10 years ago, the PE was 50 times earnings, now it's less than 10. So that's one difference on the market cap spectrum. We can go up and down the cap size depending where we see the opportunities. The second is in our fixed income component, where our fixed income guys can own all kinds of different debt securities. So they can own corporates, governments, high yields. So that's one difference. And then I'd say the third difference is that there's kind of what I call a dynamic asset allocation. So if we see better opportunities in the equity side, we can allocate more weight in the fund to equities. If there's better opportunities in fixed income, then we can put more money into the fixed income. So those three differences differentiate Global Balance Fund.
Step back for a second, because you've had 15 years of experience, in this industry. What are your instincts telling you now, at this stage of your career, about what you see ahead for 2012?
Okay, I would say I'm a bit mixed, and so on the big picture, I think that a lot of the issues from 2011 still haven't finalized for 2012. So, and that would be the situation in Europe. Too high debt levels. So I still think this has to play out, and I think there are valid concerns on that. Offsetting that, I think there's a lot of pessimism and worry out in the market, and you're starting to see that being reflected in lower stock prices. And so generally, the first premise of getting a good return is to buy something when the price is very low. And so you're starting to see lower stock prices as people are concerned. So I'd kind of say it's a bit of a teeter-totter balance where you have some big macro concerns. Offsetting that, you also see some individual companies that are very good companies but are attractively priced.
But still, given all the uncertainty out there, Why should the average investor invest with you today?
I would say, look at our track record, and a lot of people would say the same thing about how they invest as we would. But then I say you actually look at the underlying results over the last 10 years, and I think we've shown that we follow through with what we've done, and our results have been pretty good. And so I just think we have a very strong and disciplined investment philosophy. We want to own 25 high-quality companies. We concentrate our fund on our best ideas. We're value sensitive, and we're very low turnover portfolio. So I think all those reasons, I think we should do okay going forward.
Thank you, sir. It's been a great discussion.
Thank you for having me.